All right, well, Gareth, gold is sending some pretty strong signals as well that tend to corroborate your thesis. I want to point out to the audience that is not aware with you that you were very early and vocal on gold when people were completely dismissing it. As I mentioned earlier, in 2023, gold was stuck at around 1,900. You said it was heading to 3,000 by the end of 2024, early 2025. You were correct on that. People were calling you a ridiculous gold bug. So I like to point out that you were very on the money there and had it as a couple of your strongest points of conviction during some of our interviews. So gold is up roughly 40% so far this year, breaking new record highs. Also an interesting fact for our viewers, by the way, that January 21, 1980, gold spiked to 850. So if you adjust that for inflation using the CPI, the standard yardsticks that the economists use for the Fed, 850 then is roughly 3,590 in today's dollars. So with spot now above that level, we're not talking about a normal record. This is real inflation-adjusted record levels for gold. I mean, that surpassed the Volcker era peak. So anyway, again, you can look at that. Different methods move that number a bit, but big picture, gold is now at an all-time high, inflation adjusted. You've had correct calls. Where do you see gold going now? What are the key levels you're watching? What are the key levels investors should be watching?
Yeah, and thank you for mentioning that. I still remember being called all the names in the book saying gold never moves, it's never going to do anything. And again, it was just following the chart. The chart had this beautiful cup and handle pattern. It was just one of the best technical pattern setups. But looking at gold now, if we go to the chart here, what we can clearly see is that gold has had this big breakout above 3,500, which is what you mentioned was the inflation-adjusted all-time high. And I think that's amazing to think about, that the market doesn't necessarily, subconsciously it knows what that level was. And we went right there back in April, and then we went into this what's called long base of consolidation. And then what we've seen is a breakout above it. Now, there's two separate ways to look at this. In the short term, gold has put in what we call a topping tail, which means we should be due for a small pullback, which, by the way, small pullbacks are natural occurrences within markets. It's actually healthy for a chart to pull back, or a commodity in this case to pull back. So this topping tail signals that we'll probably retrace. What is the downside retrace where I would start buying again? At 3,500. Former resistance becomes technical support when you break out and retrace. And let's be clear, we're likely going quite a bit higher on gold from here. And the fact is it's just the basis of the government is going to continue to spend. The Fed is continue to do what they've loved doing for ages at this point, which is printing money essentially and flooding the system in any downturns. And that is going to fuel gold higher, and likely, in all fairness, probably down the line Bitcoin as well.
Are you comfortable calling a bottom for gold? Do you see a very strong support line? 3,000 gold? What would that be if you're comfortable calling one?
That's a great point. So 3,500 right now is the line in the sand that I'm watching, but there is always a chance when you've had something like gold run up as much as it has, you could go a little bit lower. But I will tell you this, there's a beautiful downsloping line and upsloping trend line here. It basically, at this point, I have a hard time believing gold would pull back lower than, let's say, 3,400 to 3,300. There's just way too much support now in this chart, in this zone, that as long as it holds there, you're buying it, at that pullback level. And that's exactly what I plan to do. So again, yes, in the near term, I'm a little like, again, if you say, well, where do you see gold in the next 2 weeks? I think gold comes down. I think it pulls back, natural occurrence. But if you ask me in 6 months, is gold higher? I do think gold is higher. Now, a lot of people are always asking, okay, well, what's your upside cycle target? Well, where could this go in the interim for upside? And I think to do that, what you do is you use what we like to do in the technical world is you use essentially a parallel channel, right? And we start to look at parallels here. And I would say by end of this year, I would not be shocked to see 3,800. Now, that's not the cycle top, but I think 3,800 is likely your upside parallel trend line of resistance. So I think by year end, 3,800. And then I think you're talking in the next couple years well over 5,000.
Next couple of years. Goldman Sachs says that gold will hit 5,000 an ounce if money privately invested in the U.S. Treasury market shifted just 1% to gold. We've seen that trend with central banks around the world, where gold has now taken over U.S. Treasuries as the most held asset since 1996. So the Goldman Sachs saying that trend is likely to push gold to 5,000, also forecasting that by mid-2026, gold prices could reach 4,000 an ounce. Are you in line with that? Are you more bullish? You think Goldman Sachs has a right there?
I think Goldman is pretty much dead on at this point. I love what you mentioned about these countries. Poland just announced again 30% of their treasury is going to be gold. I think the important thing is that we're slowly seeing this de-dollarization. And again, when people talk de-dollarization, especially in the crypto markets, they're like, oh, it's going to happen overnight. Reserve currencies, if you look historically, that never happens. It's a longer process, but we're seeing the writing on the wall. China just continues to buy gold. Poland now is going to do a portion. And essentially what they're telling you is that they don't feel comfortable with the power that the U.S. wields because they have to rely so much on the dollar. And so they're slowly diversifying away, which will slowly weaken the dollar over time. And in fact, the dollar chart is telling us exactly that. In fact, I want to go over this chart because the DXY chart is really, really telling. So if we go to the dollar chart here, what we've seen is a key breakdown in the US dollar here, and I'm going to just draw this in for you guys. So there was this trend line zone that was holding on the US dollar for the last basically 2 to 3 years. And you can see again, going back to 2022, we would hit, and every time we hit, we would bounce on the dollar. All of a sudden, we broke below. Now it becomes resistance. Remember, support, once support breaks, it becomes resistance. And now up it goes, rejected,